G'day, I'm Mark Pesci. Welcome to Cryptonomics Live. This is a little experiment in live video. We're here with our very special guest, Mark Jeffrey, who's also a frequent contributor. Mark, welcome to Cryptonomics Live.
Great to be back. Thanks, Mark.
All right. The reason we're here today is because overnight in Australia, the price of Bitcoin passed 50,000 US dollars. That's around 63,000 Australian dollars. That is an enormous amount of money. And the reason I'm having you on is because you made a call back 2 years ago on this show. What did you predict?
Well, I predicted that the price of Bitcoin would go up to $250,000. So we're not quite there yet, but we are absolutely trending in that direction.
But if we do the math here, when you made that call, as near as we can figure it, the price of Bitcoin was under $10,000 when
That
you made that call.
that is absolutely correct.
And that means that the price of Bitcoin has already gone up at least 5 times from the time you made that call.
Yes,
So all Bitcoin needs to do is go up another 5 times for your prediction to be proven correct.
that is indeed true.
So at this point, I think what we can say is that you're probably more right than you're wrong with this prediction.
I would think, yeah, absolutely. I mean, there were a lot of voices. When Bitcoin crashed down to 3,000 or so, there were a lot of skeptics, especially on Twitter, plugging the Bitcoin zero narrative. Right, like this is it. It's going to go down to zero. It's going to become worthless. And the opposite has happened. We've now
Well,
seen, yeah, yeah,
we see some real evidences of why that's going to be the case. We saw the Tesla buying in a fortnight ago of what $1.6 billion of Bitcoin, which because Elon is probably now worth $3 billion
right,
in Bitcoin.
yeah.
But we also saw, which major bank was it in New York that said they're going to start to keep a reserve in Bitcoin?
Oh, I don't remember the name of it
Was
offhand,
it
but
Morgan Stanley?
no, it was the world's oldest bank. That was what turned a lot of heads. We might be thinking of different banks. There have been a lot of
Okay.
announcements lately, but the trend is that real banks, real companies are now keeping their treasuries in Bitcoin instead of dollars because Bitcoin, they suspect, is a better store of value than the United States dollar. Right? That's why they're
And
doing it.
And it feeds into a narrative here because there is a fixed short supply of
Yeah.
Bitcoin, analogous to gold, where there's only a small amount of gold that appears on the world market in any given year because you can only mine so much of it because there's only so much to mine. Same thing true for Bitcoin, where all of the various machines, mostly located in China or Iran, using cheap electric power to mine more Bitcoin by solving problems in the blockchain, basically by keeping the blockchain coherent. So,
Yes.
in other words, proving that the transactions are valid over a long period of time. For doing that work, they get paid in Bitcoin. So that is mining Bitcoin. But there's only, what, every 15 minutes, what is it, 7.5 Bitcoin or something are now being added
Yeah,
to the pool?
that's about. I think it's 6.5 actually, because I think it was 14 before. I don't remember the exact number, but
Okay, but it
you're
goes down by
neighborhood correctly. Yeah,
yeah, but it's like a half life of a radioactive element. Every period of time, unit of time, it cuts in half. And so only 6 Bitcoins are being added right now, although that means $300,000 in value are being added to the overall pool of Bitcoin. But
right.
that the supply of Bitcoin is continues to be constrained. So it's got this mathematical, we can call it artificial scarcity, let's just call it mathematical scarcity built into it. And there are now a large number of people and organizations vying for a scarce resource. And in fact, that resource is much scarcer than it might otherwise be because it's believed that as much as 2/3 of all Bitcoin are basically lost in wallets or inaccessible blocks somewhere. And then when you take that other third, how much of that is actually liquid? We're starting to realize that not that much Bitcoin is actually that liquid, is it?
That is correct. There's a lot of people are taking their Bitcoin off of exchanges. So we've seen a sharp drop in the amount of Bitcoin that is up on Binance, that is up on Coinbase, and that means that people are taking it and putting it in cold storage to save it. They're not going to spend it. This is what you do when you vault things. So there are less and less Bitcoin available every passing day, which of course drives the price up, supply and demand. So
Right.
yeah,
So we now have a whole bunch of people coming to the table. We have less on the table, so there's now a scramble. So this sounds exactly like a market frenzy in the making.
Yes, without a doubt. Well, there's a couple things going on at the same time that are very interesting. One is the stock to flow model of Bitcoin, which is basically a model which has successfully predicted with crazy precision the price of Bitcoin at every point in time based on the halving effect on the economics of Bitcoin. And it basically says that Bitcoin, when the mining rewards have every roughly 3.5 years, it drives the price of Bitcoin up 10x. So, and we've seen it like clockwork go from $1,000 to $10,000. And now we're in the cycle where it goes supposedly from $10,000 to 100,000, right? So we're sort of ramping it like
But
sometime mid years when it's predicted.
the space between $50,000 and $100,000 is much smaller than the space
Oh,
between $10,000 and $50,000,
absolutely
right?
correct. Because
You
now
know,
it,
yeah.
it seems very realistic now. It doesn't seem crazy, right? So
Right.
and
And it
that's only if all things are equal, right? We're seeing massive devaluation in the United States dollar. Something like 70% of all dollars in existence were printed in the last few years. So that means that the real value of the dollar is a quarter, maybe a fifth of what it was. So relative to Bitcoin, that means the price of Bitcoin shouldn't be 100,000, it should be 500,000, right? Something like that.
Are you
So,
making a new call here on this show today, Mark?
well,
Are you resetting
in
things?
this sense, my old call was based on the fact that all things were equal because we weren't in COVID times. We weren't seeing the mad. We were seeing mad spending, but not like it has been recently. All things right now are not equal. So, whereas I would have said 250,000 before, 350,000, 400,000 is not insane.
Well, even $50,000 when viewed from the perspective of 4,000 feels kind of like, how is this possible? But we're here now.
We are.
And there's clearly profit taking happening because it hasn't gone leaps and beyond 50,000 this day. I have a feeling that the market is both taking its breath, but I also have a feeling that a lot of money is queuing up on the sidelines here. And while I am not giving, and I would not deign to give investment advice, and this should not be construed as investment advice because I am not a registered investor and I am not able to give you legal investment advice to anyone who is watching this in Australia or in any foreign territory.
Same goes for
Let's
me. While we're
let's
on the
just
topic.
be right. We just happen to be around the topic and we're taking a look at it. So it looks like both institutional investors and also a range of individual investors or high net worth individuals would be looking at this as a potential, not for all of their portfolio, but as a place to be able to put 1% or 2% or 3% of their portfolio as risk capital.
Yeah, without a doubt. A lot of people see this as, it's shorting the dollar. It's shorting the rest of the world, right? It's really what Bitcoin is in a lot of ways, and it's a good short. And then the last point I'll make about that, just going back to the stock to flow model, is in 3 years or so, maybe 3.5 years, the model predicts that each Bitcoin will then be worth 10x, thus $1 million per coin.
Right.
So if you kind of know that, you start building your treasury now. It's kind of a smart move.
So if there are 30 million Bitcoin
There's only 21
at
million. So yeah, at any yeah,
21 million Bitcoin, thank you, at $1 million a coin, that's $21 trillion in value in Bitcoin at that point.
that is correct. And the market cap of Earth. I mean, different people think different things, but most estimates are around 400 trillion. So you're
All
kind
right,
of right. So
5%. So
yeah,
you're at 5% of
you're
the
a
market
sizable part
value,
of the market value of Earth, right?
right?
So could it go to 2 million? Maybe, but if that really feels like we're bumping up against the edge of the terrarium, so I don't know that that's going to happen. But 1 million seems very realistic to me.
And again, that's only 20x from where we are now, and arguably we're 10x up from where you made your call.
Yes.
So again, when you take a look at it in terms of just the growth, the percentage growth, it's not as terrifying as saying, well, every Bitcoin would be worth $1 million or every Bitcoin would be worth $2 million. But, and I want to leave us on this one point, what I start to see now is that as the institutional investors come and start using it as a store of value because they see it as being fundamentally, by consensus, fundamentally more worthy than a currency that can be printed, right, and can lose value or can be subject to arbitrary regulation around how it and where it can be used. Uh, that that also means that there's an attraction to it beyond simply its value, right? That it has a utility value that is orthogonal to and different from its value on the market. And will that then also continue to accelerate that price growth?
It absolutely will continue to accelerate the price growth. Already, we're starting to see in decentralized finance, otherwise known as DeFi, it's largely an Ethereum based universe at the moment. However, there are a number of new products coming out now which enable you to take your Bitcoin and basically get yield off of your Bitcoin. We're talking 8%, 20%. Depending on what you do, it can be as high as 40 or 80%. And you just can't do that with dollars in the same ease that you can do it with crypto.
So what you're saying is you can buy Bitcoin and then park it in an investment vehicle so that not only is the Bitcoin increasing in value, but it's also earning
Yes.
yield on the fact that you've put it there. All right. That's a whole other topic that we will take up in our next episode of Cryptonomics Live. Once again, huge thanks to my incredibly knowledgeable guest, Mark Jeffrey. This is Mark Pesce, thanking you for watching and hoping that you tune into the podcast on Podcast One Australia.